As you can see, this is going to be recorded. Thanks everyone for joining us. We're really excited today to be at last officially launching basically Regen Digital, but also the Farmers Mutual as part of this effort. And it's been 18 months in the making, so and lots of effort from a wide range of people. So it's great to be kind of coming together at this point in time. Major milestone. So really exciting. What we're going to do is, for some of you, you'll have seen most of this presentation, but we'll quickly take you through the investment logic and what we're trying, what Regen Digital is trying to do, so you can kind of get a sense of how this fits in the picture. And at the end, we'll bring in the, a couple of slides in relation to the details about the raising. So if I share screen here, you'll see Regen Digital, good for the farm, good for the farmer. Is that all good? Excellent. Alrighty, so the problem that Regen Digital is seeking to solve is that this one around recognising that farmers are at the core of environmental stewardship, and addressing kind of our environmental practices as land stewards. But the mechanisms by which we can kind of recognise good stewardship of the land aren't functional at the moment from most farmers' perspective. So in particular, the two ways that farmers are currently incentivised is through environmental markets and green provenance markets. Environmental markets are incredibly complex, they're top-down and bureaucratic, and the friction costs are tremendous. So that effectively environmental markets don't work for farmers beyond a certain size. And similarly, green provenance markets are very immature, like the ability for farmers to be rewarded through their produce or other mechanisms. Really emergent as opposed to being functional at the moment. So in effect, there's no simple way for farms to measure their environmental value and then to effectively monetize it. That's the problem we're trying to solve with Regen Digital. And so what is Regen Digital? It's a software platform that enables farmers to understand and then monetize the value of their farm's environmental assets. That's its kind of core mission. And so how does it do that? It aims to, one, reduce complexity with respect to environmental markets and with respect to understanding how environmental assets are treated on farm. Two, because of this relationship with the Farmers Mutual, it can leverage this collective market power of farmers to create a credible and highly trustworthy vehicle, so where farmers control their data. And three, it also leverages that market power to enable for farmers to retain more value with respect to their environmental practices. So the market opportunity is large. We all recognise through COP26 that we're at a point, an inflection point. And so in terms of carbon markets, for example, these environmental markets, carbon markets last year, the total market size was around about 226 million, according to the Clean Energy Regulator in Australia. And the Carbon Market Institute, they're forecasting the market to grow to anywhere from 10 to 24 billion by 2030. So massive exponential growth in the size of the carbon market. And then more broadly, the CRO have this idea that environmental markets in total will be worth about 48 billion by 2050. So whether those numbers are correct, the trend's very clear. These markets are coming and they're going to be large, and farmers are going to have to actually respond to them in one way or another. And the other part to this is that these markets are growing beyond carbon, that the world's recognising that we need to understand land management and farming practices in their broader context. So biodiversity is becoming a real thing as a market. But there's also opportunities with respect to compensating for farmers with respect to practices that promote flood, fire and drought resilience, and that we're looking at emerging markets with respect to animal welfare or rewarding farmers for whole of farm practices. So the opportunity really is to create this farmer-owned, trusted digital platform to enable farmers to better engage with these emerging markets. So what does Regen Digital do? It does three things for farmers, okay? So it's a software platform that enables three things. One, it enables farmers to first understand the value of their environmental assets. So it enables a farmer to collect data along with their, an independent assessor or advisor to come on And it creates a data pool that's highly valued and highly credible that creates a digital twin of the farm. And what the platform enables is for that data to be analysed through various lenses to be able to kind of understand the biodiversity value of, for example, of the farm, or the opportunity with respect to carbon markets, or the opportunity to invest in dams, as the case may be. So the first step is to help farmers to understand the value of the environmental assets through a number of different lenses, effectively. And the second step is to then enable, the second thing it does is enable farmers to then kind of model what would happen if they did certain land management practices or farming practices. So what are the outcomes, both from an environmental perspective and an economic perspective and a farming perspective? And the third thing then that the platform will enable is then it enables farmers to be able to enter into environmental and green provenance transactions. And the bit it provides is it allows farmers to use their digital twin of the farm, where this highly credible data source that the farmers control, it enables them to share that data against their environmental or green provenance to demonstrate that they're doing good on farm. And so they're the three things that the software platform enables. Our onboarding product and our foundational product is right at the very start. So we're starting with that idea that we want to be able to help farmers to understand the value of their environmental assets. And the way we're doing it, we've created this environmental farm assessment. And the environmental farm assessment enables that creation of that digital twin. So effectively, as it stands, there's a survey a farmer fills out, and then there's a survey that an independent advisor fills out. And those two data sets combine together to create the digital twin of the farm. And it's map data, and it's high fidelity data with what's happening on farm. So that environmental farm assessment, we've undertaken a pilot in the Western Murray with a group of farmers down there to understand the prototype, to understand the challenges and the opportunities that are in and around creating that product. And so ultimately, the objective is to launch that product early next year to the wait list that's been created to our 230 farmers that are currently expressed interest in that, and our objective is to get to 1,000 farmers by mid next year. So what that product is, it's designed to be a really low cost, low barrier entry product for farmers to understand the environmental value on their farm. And we understand that that's a major gap in the market that needs to be filled. But the other thing that enables it to occur is enables for that creation of that digital twin that is high fidelity, high value data, and really critical.
Got a template for something like that, which I can I can use.
Do you want to mute that? What do you think?
So
I need Leah to mute him. Thanks.
Sorry. And so what I was about to say, this data set, really path critical from a trust and credibility, trust perspective and market power perspective, is that farmers retain control of this data set through their digital twin. And so that's that relationship with the mutual to creating this digital twin that enables that trust to be created. So that's the product. That's the initial product. The business model for Regen Digital is effectively there's three key revenue streams as we stand here today. There'll be more that'll emerge through time. So the first is like for the first 1,000 farmers at least, the cost of the environmental farm assessment's $1,000. And so that's the idea of a low cost, low barrier way to create that digital twin. Once you've created the digital twin, it'll be in the farmer's interest to maintain that twin over time, because it'll be the data source to prove that they're doing good on farm. So in a sense, what we've tried to do there again is to create a low cost, but like a low cost annual subscription fee to enable the maintenance of the software and the platform. And if we achieve the scale that we're after, we expect that $120 per member to provide that kind of the core operating costs, provide for the core operating costs of Regen Digital, if you like, so that the net margin that investors in Regen Digital will get will be through this the transaction fees. And so planned, or they will be 3 to 5% of the gross value of transactions that are undertaken that rely on the Regen, the digital twin to evidence good practices on farm and good outcomes. So in terms of the cost base of Regen Digital, the key cost base is with respect to building that digital infrastructure over time. And as we'll talk to in a second, we're starting with that onboarding product. With respect to farmer engagement, what it does is it leverages its relationship with Regen Farmers Mutual who has the kind of distributed relationship with all these farmer organisations across the country. So if you think about Regen Farmers Mutual is the farmer-owned broker, it has relationships with local farmer groups across the country and with land care groups and with organisations like the Regen Ag Alliance. And so it has an ability to reach a wide audience of members, and those members use the digital platform, the Regen digital platform, to evidence their good farming practices. So farmer engagement as a cost is minimised through that relationship with Regen Farmers Mutual. And in terms of a target market, as I referred to earlier, we've got currently 230 odd farmers on the environmental farm waitlist. Our objective is to be able to get to our first 1,000 customers by mid next year. We think we'll achieve that well and truly within that timeline. And that to give you a sense of the scale of the market, well, the total addressable market might be the 90,000 farmers in Australia, or indeed the 100,000 members of land care, including landholders who aren't farmers. But within that, there's if you think about, there's aligned farmers already that might be practicing regenerative practices, and you can think of in that context that the Regen Ag Alliance has 28,000 farmers in its network. So as I just spoke to, the path to market is through Regen Farmers Mutual. And just quickly, its farmer networks are, it's got relationships with National Land Care Network and good relationships in particular where land care is really strong in Victoria and New South Wales. And we have a relationship with AgForce in Queensland. Similarly, there's aligned organisations like Yenda, Peter, shout out to you today, and Farmers for Climate Action are aligned to the types of objectives that the Farmers Mutual is seeking to achieve. And then in addition to that, there's industry verticals that are particularly interested in this model, and the idea that they can use the digital twin to identify farming practices or land management practices that are specific to their industry. So something like the Riverland has interest in and around farm practices with respect to wine and certification with respect to wines and grape growing. In terms of the organisational structure, we've spoken about the product distribution occurring through Regen Farmers Mutual. So there's a service level agreement between Regen Digital and Regen Farmers Mutual, which lays out the terms under which Regen Farmers Mutual, one, remarkets Regen Digital's products. And the reason why we're remarketing them through, for example, the environmental assessment through Regen Farmers Mutual is then the members of Regen Farmers Mutual can get a rebate to the extent that there's profits within Regen Farmers Mutual on the fees they're paid. So they're incentivised to support this structure. The tech developments, our approach to that, as I say, we're starting with this first product, the foundational product, which is this environmental farm assessment. Now it is, as I say, we've built the prototype with sticky tape and glue to understand the objectives, how it works, the pitfalls, the opportunities. What we've then gone on to do is to identify some open source technology that's been developed by some of the open team network out of the States. So if you Google those guys, you'll see they're a collaboration of ag tech, agricultural institutions and universities in the US. And so they've been developing a technology kind of ecosystem to support initiatives such as ours. And one of the technologies in that stack, in that ecosystem, is SurveyStack, and it is absolutely bang on, fit for purpose for what we need. And so we've learned from our prototype, and we've arrived at the point where we've got this identified this open source technology survey stack, which we can use out of the box. So we're working with the developers to take that and to evolve it to enable the bit of development we need to undertake, and that's with respect to running the algorithms that we will be using to provide those environmental assessments. So, for example, we have Accounting for Nature, and Accounting for Nature has an algorithm with respect to biodiversity. So we'll be enabling those algorithms to run within the digital twin, so that the farmer doesn't actually share their data with anyone, and so they can get the feedback with respect to that without ever sharing that data and get that indicative assessment. And so that's the bit of development we need to undertake. We need to be able to run the algorithms, which the technology already enables. So we need to program those, and then we need to provide a user interface to be able to provide that feedback back to farmers. So it's what I've tried to describe is we've got a low cost, low risk development profile to get our product to market next year, which is this environmental farm assessment. And that's the way we're undertaking it. And the third thing that we just want to talk about in product development, we have really fortunately, as of last week, Dr. Kristen Den Exter joined the team, and she has a background in GIS, farmer data, conservation, land care. So she's the National Partnerships Coordinator for the National Land Care Network, and she's also an adjunct professor at Southern Cross University. So she's going to be helping us develop the product, particularly starting with the environmental farm assessment and understanding the mechanisms that we need to kind of leverage in order to be able to grow that. In terms of product market fit, they talk about product market fit as being you want to be in a good market with the right product, so to speak. And we think that this absolutely fits the bill. So we've spoken about how this market is set to grow exponentially, and that's why you're seeing the likes of VC-backed green collar, take 2-page spread in the Australian at the weekend, because they're seeing the carbon market as being a source of great wealth. So we're in the right market. But because of this relationship with the Farmers Mutual, we have a couple of key advantages that can't be replicated really. One is that we enable that farmers' control of their data. We're incentivized to enable farmers to control their data. We're not incentivized to find ways to actually take that data and monetize it for our own benefit, which is typically the way corporates kind of approach farmer data. Major competitive advantage from that perspective. And the second thing is we're motivated to lower costs and to drive towards transparency, whereas the broker market, for example, green collar, they're motivated towards opacity and complexity because that's the way they maximize their margins. So we operate in a space where Regen Digital and in conjunction with Regen Farmers Mutual can have a very high confidence that we can deliver into a product that will attract farmers at scale. Okay, so that I think I've just spoken to it in terms of the competitive advantages. One is that through our alignment with Regen Farmers Mutual and through the way this product is designed, we can actually push towards farmers retaining maximum value from the transactions they enter into. This idea of starting with learnings, starting with the environmental farm assessment, a low cost, low barrier to understand the value of your assets, provides an easy transition to moving from learning about these markets to actually to doing things, to kind of doing things on farm and understanding the value of what you're actually doing and how you can actually capture that value. And also we've got this very high trust kind of ecosystem, which where farmers retain control of their data, which we think is key. And on the partners side, we've got this aligned distribution network. So under the Regen Farmers Mutual model, there's 80% of the value that remains with the farmer from transactions. There's 10% that goes to infrastructure, and of that 10%, half that's coming to Regen Digital, or 3 to 5% of the 10. And the other 10% then goes to the local farmer group or the advisors on the ground that support farmers with transactions. And so that provides an alignment between that local group and Regen Digital and Regen Farmers Mutual. They're positively motivated to help roll out this model. Also, interestingly, with respect to product providers, again, it's one of the advantages of being aligned to the mutual is that we kind of everyone's friend. And what we've discovered through this environmental farm assessment process is we've been able to attract a range of different service providers that wouldn't otherwise play together. So we've got Accounting for Nature, we've got Farm Lab, we've got the Carbon Farming Foundation. Who else was in there? There was AgForce, Carbonate. Carbonate has an ISO food score, for example. AgForce is developing a whole of farm methodology called AgCare. Now, all these methodologies, we're able to kind of gather their insights in our environmental farm assessment because they're motivated to, and this environmental farm assessment provides an indicative assessment of the value. So they're motivated to participate because it becomes a way to onboard farmers or introduce farmers to their value proposition. So if you want to get a deeper, a tier 1 Accounting for Nature assessment, you need to actually pay them some money and share a deeper level of data, for example. And also that the final piece of the puzzle that is becoming clearer and clearer as we step forward is this idea that we're collecting data where farmers retain control, and it's high fidelity, highly credible data. It's creating a data set that no one else has access to, and that's highly valuable to a range of different counterparties. And so we understand that from government. So with respect to fire management perspective, for example, they have no real insights into what's happening on private land with respect to fire risk. So how we go about sharing that data or enabling farmers to share that data under the terms that they negotiate is a key kind of future benefit of the model. So just coming to the offer itself, and give you a sense of where the raising is going. So the crowdfunding is for 150 to 200,000. In addition to that, we'll come to the next slide. There's we're undertaking an institutional raise of up to 300,000. But with respect to the crowdfunding, which we can talk to today, that 150 to 200 goes principally to these 4 categories. So we've got the concept of farmer engagement, and we've spoken about that, and so how we work with the mutual to enable that to happen. Now, under the model, what that means is there's a part of that it's kind of a fixed cost that goes to independent contractors to enable that engagement to occur. And part of that, from $7,000 to 30 grand, is actually a payment for 2 days a week of, or part payment for 2 days a week of Wardy's time, basically to engage the whole realm of farmers he does. So it's a part payment. The other, the balance is taken up as a shareholder loan through Regen Farmers Mutual. So it won't sit on Regen Digital's books, but so Wardy's still at risk going forward under this kind of this pricing model. We've got some costs that have been associated with brand development, marketing of this offer, and marketing of the environmental farm assessment. Platform development, as that kind of reflects that 50,000 is principally costs to develop that user interface that I spoke about before, and that kind of reflects the low cost kind of way we're approaching this. And the legal and accounting and business development is partly some legal advice, and the swing factor there is again those 2 days a week that will be paid to me, that will go from being a part payment of 7,000 to a part payment of 30,000 for 6 months work. So that's that. Any questions we can come back to afterwards. In terms of the valuation and how we're kind of rolling out, one of the really interesting things about this kind of this approach, and it is innovative in the sense of what we're doing is we're leveraging a mutual model which enables aggregation of market power by farmers. So we're leveraging that to create a platform that where those members will be using this platform to manage their digital twin and their data. So it's a really kind of an interesting model. Here is a proprietary limited model, and all these numbers are in the offer document, by the way, which is now available online, and we can share with you otherwise. So where was I there? So so that's kind of interesting, because what we're doing is Regen Farmers Mutual has created this subsidiary. And what it's effectively doing is it's selling down equity in order to finance the costs of building the infrastructure and building its capabilities and its distribution. And so that's what the 150 to 200,000 shares are. Wardy and I had, for full disclosure, had an agreement with the mutual where we were undertaking to build the mutual, and wherever there was a market mechanism, an equity raising, well, we were thinking it was going to be, for example, if the mutual were ever demutualize, we had an agreement with the steering group that said that we would receive 5% of the equity value of a market event, and this is a market event under that definition. So for that reason, Wardy and I are being compensated for the work we've done without being paid, frankly. So we've been investing that time with equity in the vehicle. What else to say? It's key that for the first 3 years, Regen Farmers Mutual will not sell down below 50% of the equity in the Regen Digital. And thereafter, it requires 75% of their members to agree to sell down below that. What that does is it gives us at least 3 years runway and to build this platform so that farmers have complete control of the data. So it's delivering into that first value proposition. And then to the extent that the members would agree to selling down their stake would depend on the market circumstances thereafter. One of the interesting the things to think about is the way dividends from Regen Digital align both independent, third-party shareholders and Regen Farmers Mutual members, because the way members get paid rebates on their fees is through dividends being paid by Regen Digital back up into Regen Farmers Mutual.
Yeah, copper mine. That's right.
In terms of exit mechanisms, you can think about, it's clearly we're not kind of doing this to exit anytime soon, but the way that this could evolve, certainly not unheard of for companies to list where there's a majority shareholder and a free float which is the component that's effectively listed on the ASX. It could be that somewhere down the track, it's in the interest of Regen Farmers Mutual to buy out third-party other shareholders. And it's again, it's been really interesting through this process. We've had quite a bit of corporate interest from various types of organisations that interface with the agricultural sector in particular, and it points to the opportunities with respect to possibly M&A in this space. Really, it's important to note that we've done a self-assessment, and it's kind of too early to do anything other than that, but we've gone through the ATO's kind of self-assessment kind of tool, and we think that this qualifies as an early stage innovation company. What that means is that 20% of your investment amount is tax deductible, so non-refundable, but tax deductible from other income, against other income, and that capital gains with respect to investments in Regen Digital, if they're held for longer than 12 years and less than 10 years, you don't pay capital gains tax on it. The capital gains are effectively exempt, if you like. And finally, as I mentioned before, we've got an institutional raise that'll occur alongside and will close basically a week after the crowdfunding raise, if not before. We've got 100,000 of that already spoken for. And the reason for that is that we had to find a way to kind of manage these conversations with corporates and other folk who are interested in investing in order of magnitude $100,000 amounts. And so in order to do that, it was better to do that outside this raising, because it's kind of a binary outcome as to whether that money comes in. And in addition to that, we kind of want to manage pretty carefully about who we bring in and how. So I think that takes you to the end. I've probably talked enough at you for now. If we turn it over to you guys for questions, that would be awesome.
Hello, anybody got a question?
What do I do?
Yep.
How long does it take to do the environmental farm assessment?
Well, we've in the pilot stage, it's been quite interesting and probably longer than when we get it, smooth. But to do the farmer self-assessment stuff was at least a 4-hour, 185 questions. I think you could probably provide that over a sort of a longer period that was more questionnaires that are based on the specific answers to an initial questionnaire. So you might get some efficiency there. The mapping, it takes, the right person, maybe an hour to map a farm, its soil, its vegetation types and production areas, pieces of infrastructure, etc. And then on farm, the sampling is probably a day in field. You're going to do 3 to 9 transects, depending on how many vegetation zones. And each of those is an hour at each transect. Plus you've got some setup to put in some star pickets and measure out some tape measures and things. So look, it's a day in field. And then I'd say it's half a day digitally by the farmer and by the mapper.
So is that cost neutral to you?
Yeah, it's low margin to us. It's not meant to cost us any. We'll probably pick up some money along the East Coast where there's not much travel, and we'll probably lose some money the further west we go with Great Divide. Yeah.
Okay. Cheers.
Any other questions? Great question though, was. Frank.
Is the carbon trading open also for voluntary international markets like Carbon Future Earth in Germany, for example?
Yeah, so when this is more of a Regen Farmers Mutual question, but when we go, as farmers into environmental or green provenance markets, it's the best market that we can access. Now, we look at the Australian regulated carbon market as the market of last resort. So if we can't from the voluntary market or direct engagement with known buyers, which we think can attract a premium, well, then at least we can go through the regulated market within Australia.
Just to clarify on that, because it's so not necessarily last resort, but like the way the Australian regulatory market has evolved with through the ERF is that the option contracts are now in the last auction back in October, every contract that was entered into was an option contract where the seller of the carbon has the option to sell it. I think the clearing price was $16.94. So they have the option to sell at $16.94, but they're more than capable of taking those ACCUs and selling them in the voluntary market at a higher price. So it's a put option to the government as opposed to the last resort.
The reason why I'm asking, because in Glasgow, they were talking about double dipping, that there is a risk that governments around the world will say, we have done this by 2030, for example. And meanwhile, the people on the ground, the farmers, missed out on an enormous opportunity by being engaged in the voluntary market, which looks at a ton CO2 over €100 now. This is for stable carbon, right? So verified. So I think it would be beneficial, especially at this beginning, not to be locked into a Canberra scheme only, when there are enormous opportunity waiting from very large corporate that they simply have no other option than to buy certificates, because in the, let's say in the software, computer technology, communication, etc., even airlines for that matter, or current car transports, if they're looking for manufacturers looking for carbon offsets, they will now look at very stable form. And that's, as you may know, I'm involved with biochar. And that's just one pure organic carbon that lasts for a long time, that can be used in building rather than in soils as well. So in construction and mopping up pollutants and so on. And so farmers are directly linked, instead of just being blocked into what is currently on offer in Canberra. But we can have that discussion another day. So I just thought...
that's fantastic, Frank. So I think the point is that in terms of carbon, and we're actually looking more broadly than carbon in any event, but like your point's well made.
Me too.
Yep. We think that the way that the market's evolving with Canberra is it's more of a put option. So it provides a floor to enable you to finance a transaction. It's not actually necessarily where you actually sell into. It gives you the ability to take those, whatever it is, but like in this case, carbon, and sell them into with highly credible. So the ACCUs are, a highly credible kind of international credit union unit. So if you qualify for those, that's something that's a good place to start.
We've got Lynn and then Andrea. Lynn, hi.
Hi. Yeah, I'm just interested. You're giving the figures as 100,000 Landcare members they might reach. I'm just wondering how you're planning on reaching them.
Well, fortunately, we've got in place great relationships with Landcare Victoria at the board, and they've got an MOU in place with us. We're working very closely. In fact, the co-design for a lot of the Regen Farmers Mutual came from Landcare New South Wales. They've unfortunately lost their CEO in the last few months and hasn't been replaced.
They do have a new one because I'm involved with that. So.
Oh, awesome. Well, we'd love to meet them and get the...
Is in place. Yeah.
Well, where we are very fortunate to have Kristen Denexter. Yeah, but yes, we haven't actually. New South Wales has been going through there, as you well know then.
And I'm on the council, yeah.
Oh.
Okay, yeah. Thank you. I was wondering.
Andrea.
Yeah, hi. You mentioned that FarmLab is involved in the farm assessments. How does that work?
So when we were doing the pilot, we needed to do the mapping. We looked and FarmLab came in and helped us to do, the cadastral map and put in the layers and identify the monitoring sites. So going forward, we have had chats with FarmLab, and more than likely we'll stick that mapping capacity onto our service, to our own servers through a shared processor. We haven't got to the sorts of commercial arrangements, but we do know that we need, a mapping solution that ties in with Survey Stack and FarmStack. And FarmLab's kind of done a few good things through the pilot, such as include the data capture points that we need for accounting for nature, native vegetation and soils collection points. So now you can get a tier 3 measurement on the accounting for nature econ kind of method, and attach that along with the relevant photos to your mapping. So it makes that a much more rich map because it can tell you a lot more information. So the commercial arrangements still to be worked out, but functionally, it was a really good experience working with FarmLabs, and we're hoping to continue to work with them. Yeah. Oh,
thank you.
Yeah. Anybody else with a question?
Well, I'll throw on just quickly. In terms of indicative values of environmental goods and sector services on a per hectare basis or something, do you have any idea?
Because of every bit of dirt's different and every environment's different, it is very difficult to give you that answer. Every farm and within its context might be able to monetize differently. So, go for it.
The idea of having a number is not going to make sense, but like the idea of having different lenses. So one of the things that has become clearer and clearer to us is that the idea of just talking about carbon as the way you reward farmers for good practice is just, it's ridiculous. It's just such a limiting lens. Things like if you're doing things with respect to soil, that are building up your organic matter and doing that in a way that you're saving on your fertilizer costs because you're recycling, so capturing that value in addition to the carbon, capturing the kind of the cyclical, economy kind of benefits in the sense of if you're recycling waste in order to enable that, if you're doing an investment in your dam and you're creating a biodiversity zone around the dam, there's carbon, there's biodiversity, there's whatever the layers of benefits are.
I get the multiple dimensions. I'm trying to feel for what it is worth per hectare.
look, if you did really crappy maths, 2050, the NFF reckons agricultural outputs are at $100 billion. And again, if you do crappy maths and you go, CSIRO puts it at $48 billion for the total environmental markets. And let's do some maths on that. 48 billion out of, out of that, maybe agriculture is 40% because it's 40% of the land mass. So if you divided, let's say, $20 billion by the 100,000 farmers, that's what's coming into the space.
Yeah. I'd prefer to, I don't think I think you're better off kind of starting from the basis of, if you're thinking about from a Regen digital perspective, what's the value of this business? You'd go, well, let's say the net margin's 3% because the rest of it's kind of a wash. Okay, so 3% of the gross transaction value. All right, so what potentially is the gross transaction value? And you might start with, on average, there might be carbon of X. You might say there might be biodiversity of Y. You might say, well, okay, there's provenance markets coming. So like, what percentage of that flows through? And you come up with a number that, I don't know whether it's, whether 250,000 it sounds low, it's a lifetime value. Is that a lifetime value of these types of gross value of these transactions? Whatever the number you come up with, if it's 3% of say 250, that gives you the kind of the value per farmer. And then you think about, well, okay, how many farmers could this be useful for? And we think it could be a major, kind of part of this sector by virtue of the fact that mutual farmers controlling their data, creating their digital twin. In Australia, there's typically in any industry 1, 2, 3 players. We think that this has the opportunity to kind of position itself in there. So regardless, even if you start low and go 1,000 or 10,000, sorry, mate.
I'm a disciple. I'm in. I just, I love it, but I'm just interested. That's all. I don't want to take up a lot of time.
No. It's fun to do the maths because you come up with a big number pretty quickly in terms of evaluation. And so in terms of our immediate future is to go, like Wardy's specific job for the next 6 months till June next year is to get 1,000 farmers on and hopefully bust that number wide open. But if we can get to 1,000 numbers, we're in a good place to actually then do more significant capital raising at that point in time because we'll be able to demonstrate a higher valuation to then do that next bit of work and without diluting the crap out of everyone, but where we can do the next bit of work to enable that kind of delivery of stages 2 and 3. And that's where we kind of start getting into some of the deeper value. But it's really about getting numbers on board for initially over the first 6 months.
All right. Any other questions?
Adam Leggett here.
Hey, Adam.
Hi. Great to see this coming together. Has there been any thought in sort of using councils within regional areas of farmers as a sort of a channel to farmers in sort of creating that connection whereby there's almost a lot of councils are offsetting emissions to get to net zero, where there's almost a local connection between what the farmers can do on their farms and that being picked up in the local economy rather than them buying offsets and them going wherever.
That's so good, Adam.
So
that's so good.
Eh?
That's so good. That is just like it's come through. It's one of the things that's particularly comes through on the east coast of Australia, and in the where there's been it depends on which kind of demographic you're talking to, but where there's been some resistance to the idea that these credits could be sold for greenwashing purposes. And so there's been really interesting in terms of our conversations with, for example, up around the Bellingen area, where you can imagine that might be something, a kind of a concern. And so there's 2 things. One is they don't want to sell their credits to begin with, but they want to do good and farm. And 2 is they don't want to sell them for greenwashing purposes. But they do recognise that there's a cost to actually kind of doing some of the good work, whether it's kind of repairing areas to reduce the impact of floods, for example. So there's things that can be done that need to be financed and that benefit the local economy, as you're saying. So like, for example, talking to well, New South Wales Transport are the biggest buyer of biodiversity offsets in New South Wales, and they've really responded favourably to this idea of turning from being a reactive buyer of biodiversity credits, where we're building a road in here and having to cut down some trees, so let's just go buy a biodiversity offset somewhere, to go, let's be proactive, let's look strategically about what our kind of goals are out next 5 years, and let's engage the community, which is what we took to them. We said, well, this model enables you to engage the community of farmers and landholders, and to proactively look how you can catalyse like landscape scale impacts through your needs for biodiversity offsets. And so they've responded to that saying, awesome, we're going to create a fund to invest in the products that, you know, in the outcomes that your farmers can deliver, for example, which plays exactly into what you're saying.
Yeah, even more immediately, Adam, just this week we were at the environmental officer, agricultural extension officer for Byron Shire, contacted us to do a good for the farm, good for the farmer presentation. We've been working with Coffs Harbour City Council, particularly their economic officer, at what they can do. Again, that sort of Bellingen, Coffs Harbour, Eastern Escarpment opportunities. But yeah, really, I think you're right, councils and their relationship with local farmers and their relationship to local industry and tying a nice bow in that circular economy is really cool.
Yeah, I just think it's that's always that channel to get to a lot of farmers very easily, and economic development particularly is where I'm thinking, because they're engaging with farmers and they're all thinking about these issues, and this is a nice sort of win-win-win for all.
Violent agreement. Yeah. Oh. Karen, how's your reception, Karen? Sorry, you couldn't talk before. How's it going now?
That's fine. I thought I'd chosen somewhere that was going to be quiet and good reception, and yeah, I had it wrong. So all good now. I just wanted to clarify. I am a babe in the woods when it comes to understanding the complexity of all of this. I, like the other fellow earlier, I'm a disciple. I'm in, but I'm still working on my learning and my understanding. Can you just explain to me, is there a difference between the carbon credits and the biodiversity credits, or am I just making a little bit of a misunderstanding there?
I'll have a go at that one. So yeah, I mean, carbon credits are well established in Australia. They've been codified by scientists, and you know, the government will issue you carbon credits for complying with a method, and then you can exchange them for money. They're a registered financial product. Biodiversity, on the other hand, conventionally is an offset. So if you're a road developer and you use a hectare of land, you have to protect a hectare of land of the equivalent ecological type. So they've been the traditional kind of biodiversity and carbon markets. They're both evolving. What we're seeing is carbon plus other benefits that the farmers are producing, whether that is the creation of more biodiversity on their farm, greater water holding capacity on their farm, the protection of nature and certain species on their farm. Then you can get carbon plus, and you don't just get that plus necessarily through the ERF. You can get that through voluntary markets, which aren't the government, they're corporations buying it. And likewise in biodiversity, there's just this view that you should actually be as concerned about biodiversity as you are about carbon. We're on the brink of an extinction event. If we lose pollinators, for example, we're in deep shit in agriculture and in society. So we want to be able to protect biodiversity, but the problem with biodiversity is it's incredibly localized. So, you know, how do you measure biodiversity between the desert area, a semi-tropical and an actual tropical area? They're all different measures. But biodiversity is starting to learn from what carbon did and create methods and create rigor and create measurement frameworks from validated scientists to be able to show ecological condition and the change in that ecological condition. And it's believed that the voluntary market for biodiversity will be as big, if not bigger, than the voluntary market for carbon, because it's so important to life sustaining, community sustaining, and farm sustaining activities. Hope that helps, Karen.
Yeah, no, that's good. And with regard to within the Regen Mutual group, are they going to be measured or accounted for as separates, or will it be a combined?
Yeah, so a digital twin will show the underlying assets on a farm, whether those are carbon or biodiversity measures or water holding measures, or how much spraying or what mix of food and fiber did you produce off your farm. All of that information is in your digital twin. And you permission that to what we call the Regen Mutual Nature Fund. And it has the ability to then remarket to regulated or voluntary or direct markets with customers. When we sell that on behalf of that farm, it's often not one farm, but a whole stack of farms or a whole stack of underlying carbon, biodiversity, and benefits, or outcomes, you might call them. The transaction happens, 80 cents in the dollar goes to the farmer, 10 cents in the dollar goes to the farm group, and 10 cents in the dollar is retained between Regen Digital and Regen Farmers Mutual for the provision of that digital twin, which describes the underlying carbon, biodiversity, water, or environmental outcome.
Okay. And can I ask just one other quick question while I've got your attention?
Sure.
When we're talking about the digital twins, how do we update that? Say you start off at point A, and then in 5 years' time, you're going gangbusters and you brought on all these new projects and you might have introduced new business streams. How does the update happen? Is it a whole begin again, or is it an add-on, or?
No, the first cast of your digital twin happens with the environmental farm assessment, but it's meant to be a living, breathing reflection of the actual farm. So if you use farm management software, whether it's grazing software or agronomy software, practice management software, you have APIs between that software and your digital twin, and you're enabling that to, share and share alike. As the farmer, you're in complete control of what IoT devices or softwares or measurements you make that go into your twin. And then you have complete control over which bits of that data you want to share on to others as well.
Okay, thanks very much.
It's a really interesting, because what we're starting with is the environmental farm assessment. And so we've got a really clear goal for the next 6 months. It's like, get the environmental farm assessment, get that to a point that, like, it's it's called a minimum viable product, but get it so it's doing what it needs to do to be able to demonstrate value to farmers. And we need to get have a demonstration of collected our first 1,000 farmers. If we've done that, that'll tick a lot of boxes for a lot of people, because that puts us in a really great place to then do the next step, which is then enabling that kind of ongoing analysis, modelling that first product won't enable. As Wardy says, that first product enables the casting of the digital twin. In terms of the technology, we've got a visibility, a line of sight of where we might go with respect to that. And it'd be fair to say that the Open Team Network and States, Wardy, are really excited about our use case, because they're going, my God, you guys, we know people globally who are kind of pursuing this structure where we've got this Farmers Mutual and a company underneath, which is the digital platform. And so they're looking at this going, this is brilliant. We can kind of look to see how we can integrate the various technologies within their ecosystem to enable this. So they've already got a piece of software called Farm OS, which could be the basis for that ongoing kind of management. So it's a task-based system where, when you do something on farm, that data is then added back to your digital twin. So that potentially is where it's going. We just haven't put that into the document because that's not our immediate focus. The immediate focus is demonstrate the value proposition with respect to the environmental farm assessment and get 1,000 customers.
All right, we're coming in on 2 o'clock. Unless anybody's got a burning question, I'm going to say thank you, Rowan. Awesome presentation and very detailed. For people that would like to have private conversations, either from a farming agricultural perspective or from the investment perspective, both Rowan and myself are totally available. If you've enjoyed listening to this and you're inspired to invest, we would absolutely encourage you to do so. The offer's been open for 2 hours and it's been crashed for over an hour of that at various times that we've tried to go through. You might view this very positively, like Warwick Pelly, as it's increasing buyer desire, or it might be just friction in the pipeline. What I'd encourage you to do is persist with it, but we have heard from Birchall that they're expecting from 2 o'clock their services should resume and everything should be a-okay. I've just seen it's 2 o'clock. So if you would please head across to Birchall and help farmers who want to profit from doing good by the environment. Thank you, everyone.
Great job, Woody. And thank you, everyone. That's been fantastic. Good questions.
Leah, do you want to just pause the recording and the live?